Hi guys, we're here today at an open house at 2052 Greyhawk. I've been plugging it all week, so we're finally here. This house is $179.9. I just price reduced it. Tell me, like, some of the good stuff that Guaranteed Rate does.
So there's a lot of different options. You can do something like IHDA, which gets you a $7,500 credit. So you can apply that towards your down payment, your closing costs, all that stuff. So that's great. The minimum is 1% or $1,000. So that's all you would technically have to bring to the table if you work in a seller credit or something like that. So it's a great option for someone who they have good credit, they have good income, they just don't have the down payment that they need to get into a house.
So it's 1% of the sale price?
Correct, yeah.
Okay.
$100.
And so you said $7,500. Now, isn't there some type of like stipulations as far as being able to qualify for something like that?
Correct. So you would need a 640 credit score or above.
Oh, shit.
And if you leave within 5 years, it is prorated. So you'll pay per year. But if you leave 4 years in, you're paying back 20%.
That's right. There is a timeline there that you have to stay in the house, right?
Yeah.
Okay.
But it's not too bad. For what you get, it's actually a good deal.
Well, yeah.
Yeah.
Another thing I was going to ask about those loans, if you do not have a 640 credit score, is there any way you can leverage that? Like, let's say my debt to income ratio was not very high. Like, I make good money, but I had a BK like in, it's not fully discharged yet, but so that's making my score low, but I make a lot of money and I don't have a lot of debt. Was there any way to offset that 640? Because...
Definitely. A lot of what I recommend to people is I have a credit simulator, so I can go in and I can recommend things to increase your credit score or ways to bump you up to what we need. But if you do have a good debt to income ratio, good assets, some other offsetting factors, sometimes the system will allow you to go lower. So Home Ready and Home Possible are great options too. So if you're a first-time home buyer or haven't bought in 3 years, or I should say owned in 3 years, you can put 3% down. So you combine that with...
Conventional?
Conventional.
Ooh.
Yeah, so you combine that
That's
with
great.
Your seller credit and all that. I mean, you're coming to the table with sometimes same thing, 1%, 2%, depending on the taxes and transfer taxes and things like that.
Yeah.
So there's a lot of good options.
Yeah, that's great. What makes up a big majority of buyers are millennials or even just the younger generation.
Yeah.
I mean, and then even the older generation, the boomers that are downsizing. So all those types of demographics would definitely fit, don't you feel?
Yeah, and you're able to get gift funds. So if you're going to purchase something and someone in your family was able to give you the money, you can also use those options.
He's saying gift, not give.
Yeah,
so
gift,
a gift.
funds.
So say what a gift is.
A gift would be something that they're not going to expect to be repaid. So you'll sign a letter that just says, the money's coming from this account, this is how much I'm giving, and I don't expect to get it back, basically.
Mattress money.
Yeah. Yeah, it's quick. It's one page. It's not complicated. It's fairly easy.
Wow.
Yeah.
I like it. So if you're interested in buying a house, maybe this is the one. I mean, it's a quaint little house. It's 2 bedrooms, 2 full baths, 1 half, and downstairs I think is the moneymaker here because it's a 100-inch entertainment system.
Great for football.
Theater, for sure. The only problem that Matt and I have is he's a Packers fan. And I'm a Bears fan.
Tell anybody.
And this house is all Packers. So we got to get the Bears. No, I'm just kidding.
Okay.
So Matt brought cookies. Happy hunting.
Yeah, come say hi.
Come say hi. Thanks.
All right.